Well. March 31st, 2026. We had an interesting day today because we had our first reversal day. We've been selling off for a long time, for over a month. And today we had the first, what I call turning point, what other people call inflection point. The buyers came back strong today. We had a huge day today. Here's what the 1 minute chart looks like for the whole day, so you can get a grasp of the momentum that occurred. Here was the first opening range right here. And then as you can see, the momentum continued in the final half of the day. And we're going to go over the strategy, and we're going to look at what happened, and let's just look at what happened. Let's just see the trades I took, and we're gonna get right into it. I had another profitable month, which means that we are really understanding the meaning of consistency at this point. And profitability only comes from consistency. Profitability may come temporarily from non-consistency, but if you want profitability to be constant, the degree of constance with profitability is dependent on your consistency. Here was the first trade I took today in the market right here. What do we see? We see the momentum going up. See this momentum right here on the execution time frame, and we see a volume confluence. So if we have a volume confluence, and at the same time we have higher time frame support, 5 minutes right here, 5 minute regular, 5 minute extended, 15 minute right here, 30 minute right here, 2 hour right here. If we have higher time frame alignment and we get a volume confluence on the execution time frame, 1 minute, 2 minute, 5 minute, whatever your execution time frame is, sometime 30 seconds. The 30-second chart is pretty interesting when you look at it. For folks that trade the 1 minute chart like myself, the 30-second chart is very interesting. Will it give you earlier entries? Will it give you better expected value? Something to think about. On the 1 minute chart though, talking about my trades today. What happened? Sorry. Here we go. We had a volume confluence right here, and this was my entry for my first trade of the day. So my entry was this candle right here. Why? Because of volume confluence, with the momentum going in line with everything else, an alignment of momentum. So this almost got stopped out. As you can see, my stop loss is always right at the edge of the entry candle or slightly beyond it. And look, the price action almost came back to hit it, but it did not. And it hit the profit target because I used the edge of the candle as my ratio. It actually did end up hitting the profit target right here. So it resulted in a win. But it was millimeters away from being a loss. Just mere cents away from being a loss. So we could count that as a loss statistically, and it would be okay. I would still be okay with it. Let's see, there's some other things I wanted to talk about today. Look at this right here, this message. Rejection at the opening price. So we open right here at this price. And then we have a bunch of things happen, and then we come back and look at this straight retracement. Look at how straight this line is right here. That's kind of interesting, right? Look how straight this is. So whenever Lance, one of the most famous traders of this generation, Lance B, if you want to look him up, B as in Brandon, the one Lance B, he always says that the cleanest sell-offs tend to have the cleanest recoveries. He says that quite often. A lot of people are aware of that, and this is what happened today. We had a clean sell-off, and then it rejected right here. At what level? It rejected at the opening price, literally, right at that kind of range, right at that region, and then it just popped right back up. Look how interesting it is. I mean, it's just, these levels start to make sense when you are in the game long enough. You start to see these repetitive things, and you're like, okay, starts to make sense. This retracement recovered all the way back up to previous market day's high. That's what this pink peach line is right here, previous market day's high. So with that being said, we retraced back up and I took a trade right here. Anytime you see a yellow line, that's a trade that I actually took. These yellow lines that are scattered throughout the chart. And because we were in the middle of the market, we're going to be using a 2-minute chart, not a 1-minute chart. So we're going to go to the 2-minute here. We're going to switch over just so we can see the perspective that I saw when I took the trade right here. What do you see? A volume confluence on the right side of the momentum. The 5-minute twins are aligned. 15-minute going down. Good. Almost crossing over, not quite, but it's close. So this is a higher risk setup because all of the other time frames, the 30 and the 2-hour, are going up. They're going against us. This is a high risk trade because of that. So we enter right here to close the candle. Stop loss slightly above that candle, and that first target was hit. Second target was hit. It's another win on the day. Next setup was right here. Here's what the alignment looked like for that one. All right, next setup was this one right here. Here's what the alignment looked like for this one. And this was a good trade because, as you can see, we had a massive... What is this? What is this in your mind when you see this kind of stuff happen? What is it? Look at the volume. Look at the volume real quick. Okay, we go from this to this. If you don't immediately know what this is, and I'm going to tell you, but if you don't immediately know what this is right here, then you're way behind. You're behind by 6 months, you're behind by a year, you're behind by a lot. So now I'm going to tell you. Whenever you see this kind of stuff happen in the market, that's large institutions turning on buying programs. That's what they're doing. It's some firm or many firms, not just one. It's a coalition of companies or one single company, doesn't matter, turning on a buying program. This can be, it can also go the other way. It can be a selling program. This can be because of news catalysts. It can also be because of other market-driven factors. So that was a good trade right there. As you can see, that was a massive trade. And then that was it for today. That was all the trades I took for today. And with that being said, I'll see you in the next one.